Welcome back to Small Caps. My name's Kerry Stevenson. Our fortnightly update with the wonderful, the unpredictable, the always funny, the always incomparable Tony Locantro from Alto Capital. How are you?
Awesome. Great to be back. Market's always an interesting beast, Kerry. So just preparing for 2021.
Oh, Tony, listen, first of all, where's the last 2 weeks gone? It feels like I only spoke to you yesterday. And then 2020 just seems to have disappeared now you're telling me 2021. It's getting scary. Not scary, but it's just time is it because I'm getting older? I don't know. But anyway, people love our little catch-ups every fortnight. I just think that the fortnight came around very fast this week, and there's your beautiful dog in the background. Got to love that. Love a Zoom call with a doggy in the background. Anyway, Tony, what are we going to talk about this week? What little gems are we going to furnish our wonderful viewers with?
Well, it goes back to my policing days when I used to pull drivers over, and they'd have an excuse for everything. Like the old one for kids is my P plates blew off, I haven't got my license, I had a drink in the last 5 minutes so they could get extra time. But I'm focusing on excuses I cop from my clients who are trying their hardest to go broke.
What do you mean by that? What do you mean? So you're giving them advice and they're not taking it, and then they're losing. Is that what you're saying?
It's like this never-ending pushback. And it reminds me of an episode of Seinfeld where George Costanza does the complete opposite. Like he orders the chicken on rye. He walks up to the blonde and says, "I'm George, I'm unemployed, I live with my parents." And I just think that some of my clients could actually become successful by doing the opposite of what they're thinking. They let their emotions catch on. They want to buy rubbish stocks at the top. They're falling for all the chatter. They will not take windfall profits when I tell them to sell. And it's just this psychological battle that I'm playing with. And I'm just trying to get everyone in some mental shape because there's no friends when it comes to money. And this run we've had this year has just been far too easy based on the conditions we've had.
Yeah, it's a good point. And in fact, James Dines wrote a book called Mass Psychology, all about the psychology of the markets and things. But my question to you is, why do they ask you to look after, their accounts if they're not listening to what you have to say?
I think it's loss of control, and it does stem from a bit of a trust issue. I guess what I encourage people to do, I am drowning in new clients thanks to this little segment, Kerry.
Sorry about that. They all love you out there, Tony. They like what you've got to say, but maybe it's time to cull those ones that don't listen to what you're talking about.
It's like the Sydney Swans no dickhead policy, isn't it, really? Yeah. Anyway, so they come to me and I say, well, look, let's design a portfolio and you're going to learn on the job. You will get lots of information and it's going to be the quickest market education you're ever going to get. But, the list of excuses, I've had some classics. I floated Independence Group and we did the loyalty options. And this is at the height of the nickel bubble. And I rang a client who had 100,000 shares at 20 cents. And I said, look, at $10.52, you need to sell this stock right now. And he said to me, oh, I'll think about it over the weekend. And then the share price dropped, and then he rode it all the way back to $1.15 during the GFC. And I'm thinking, for Christ's sake, here I am, $20,000 IPO, and you've made well over $1 million, and you're disrespecting my advice to take it. And then he did it again with Medusa, same story, up $1 million. Oh, I'll think about it. And the other excuses will be from clients. Oh, look, I'll ask my wife. I'll talk to my wife.
Oh yeah,
which doesn't work. You can't have two people trying to drive the car at once unless you're an instructor with those gears. And then the other one is I'll think about it. I mean, what an absolute load of rubbish. That's just an excuse to get me off the phone. And what I've noticed is...
Tony, you know what? It doesn't matter whether it's stocks, whether it's multi-level marketing, whether it's buying a car. It's the same excuse. I'll think about it. I need to ask my wife and I need more time.
Yeah, I mean, I've got clients that are up 5 to 10 times on a stock and they won't answer the phone. It's just like, I feel as though I'm from the ATO or the child support agency, which I've had good experience with the child support agency. So the moral of the story is don't get divorced or have kids. But anyway, it's funny how people get into the same pattern of behaviour. And I've dealt with people for years that cannot change. No matter how hard you try and teach them, they will not change. And it all stems from, if I say a stock's great value at 10 cents, they'll say, well, place me a bid at 9. And I had a lot of people that missed out on Stavely for the sake of 1 cent. And I try and instill into them, look, if the stock is great, if you go and look at a beachfront property that's cheap and you think it's a fair price, you just pay at market. I'm telling people, if a stock's great value at 10, just pay 10, because in life, you're always going to find a car with lower kilometres on it, maybe some sports seats or a pinstripe. Just this buyer's remorse is just going to do people's heads in. And so that's buying. I think buying's the easy bit. I can easily put my clients in stocks, but when it comes to selling, I mean, bugger me. A stock's 5 bag. I'll say, look, sell it at 19 cents. And they'll say, but I want 20 cents. And that's where you get this build up of people that don't need a calculator. So you might have 500,000 shares for sale at 20 cents and bugger all at 19.5 cents. So what I try and teach my clients is put your sell order at a non-psychological price point. Like, go a step below the market, or if you're really greedy, go at 20.5. And once that wall of 20 is broken, look at it from there. But, it's a tough gig. And I think what people have become used to is these easy profits, and times can get pretty tough. And another thing I've noticed is when a stock has a blow off, like it just has this speculative blow off, you need to sell some shares at or near what you feel is the top to reduce the anxiety. Because I had clients that paid 5 cents for a stock, it ran to 23, they didn't sell, suddenly they're back at 16, and that capital becomes dead capital. They don't want to sell because they think that they want to get back to 23. I suggest sell a portion of that stock into the blow off, and then let's look for another 5 to 10 bagger and keep your capital moving. But I guess everyone's scared of having a stock go a little bit further. But what I say to people is, would you be buying this stock at this price? And the answer is often no.
Do you think that right now, given the market is a little bit hot, well, it seems to me that a lot of stocks, it's up and away. Do you think that's changing people's behavior right now, that they're all like, oh, no, it's always going to be up and away, and they're going to get a bit of a shock if there's a pullback like there was back in March?
Oh, absolutely. And what's driving these prices is pip traders. So they're coming in at 9 cents, trying to sell at 9.1. I've actually been disgusted in some of the market depths I've been watching where, someone will come in with a bid for 1 million shares and take it off straight away. And you see this flurry of traders in over the top. I just think there's a lot of dirty tactics going on. There's a lot of, it's just absolute trading madness, and cue the Benny Hill music. And it's breeding complacency. And what you've noticed now is the float runway. It's like friggin' Heathrow.
Yeah.
So we've got all these companies, a lot of them are absolute rubbish, just trying to cash in on the IPO wave. But I was saying to my clients, honestly, this is a Twitter ramp. This guy with 7,000 followers is pushing the crap out of our stock, and I'd like you to sell it. but they always think that there's an ulterior motive or there's something fundamental coming. But if you don't act on that speculative frenzy, then suddenly you actually become downbeat of a stock you made 5 times your money. It's just, I think a lot of people are going to be on a psychology basis are going to be spent. And the first decent pullback we have, now when you've got the Dow Jones around 30,000, we're going to have some 1,000 point down nights. And you watch all the people panic out. Same with the gold price, which is still only down 5% for the month, but gold is going to have those corrections.
Do you ever advise your clients that, now let's do an example. I'm your client and I put $5,000 into a stock at whatever price, doesn't really matter, doesn't matter. And that stock then becomes 10,000. Do you ever advise your clients, look, let's take out your initial investment and the rest is free carry? Do you ever advise that? Or do you say out, let's just get out?
I hate that strategy. I hate that because free carried money is the laziest money you're ever going to get. So it just breeds complacency. It's like someone feels as though, do you have to go out and lay bricks to get the money? Or because you made it in profit, why should that money be treated any differently? I think saying I'm free carried, I can't lose is an attitude I'm trying to slap out of clients because it doesn't work.
Why doesn't it work?
Because you become lazy. If you put 5 grand into a stock, it becomes 10 and take the 5, you don't really care about that $5,000. I mean, money has to be respected. Profits have to be respected. And at the moment, they're not. And the other area I think that breeds even worse complacency is a stock. Just say someone pays 10 cents, it drops to 9. They'll ring me and complain forever. It gets to 10 cents and then suddenly they're comfortable and that stock could stay there for a year. To me, it's all about effective use of capital and not worrying about the break-even sale. I mean, I'll have clients that will go through, I'll say, look, I've got this opportunity coming up, and they will not sell a stock at a small loss. And I say to them, look, all that matters is your bottom line. You might have 15 players, but only one can really make all the profits and the rest are plotters or some will do jack. But it's all about the bottom line. I don't care about the individual stories. I know that's hard. Everyone just tries. It's like trying to win every hand of blackjack. And you sit on a 16 the whole time thinking the deal is going to bust. You just, speculation is an aggressive game. You just can't go defensive.
What about a sort of a Warren Buffett outlook where, looking at, strong, good companies, decent dividend, like, do you ever say to your clients, this is a good company, it's solid, it's strong, and let's, I don't know, Coca-Cola, do you ever say, let's just park some of your money into that and let it sit there and take the dividends? Or are your clients all about the sort of the 5 cents to 10 cents? Is it all about more of the speculation side of things? In other words, do you sit part of their portfolio in a strong, fundamentally good business, or is it all about riding it up?
I mean, if I had a DeLorean, I would have put all my money into CSL, and I've actually would have borrowed to go into CSL. I mean, everyone sees these great investments in hindsight. But what I've done is that book, 100 Baggers by Christopher Mayer, says to put some shares away each year and open it on a certain day. But how I'm going to do this is I've got to work out which one of my stocks is a Usain Bolt or a Kenyan marathon runner. That's what you have to work out. And a lot of these stocks are lower quality, the only thing they'll mine are investors' pockets and create brokerage. But you've got to work out, if that goes 5 to 20 cents, do you hold it long term or do you get the hell out? But the ostrich approach in speculation is another way to go broke. So my view is the speculative market is fluid. If you if I do my research and make you 500 to 1,000%, respect what I do and take some money and let's find the other one. You just can't, some of these companies are going to grow. There's a couple there, Independence Group, which became a blue chip. Northern Star, which we raised at 5, became a blue chip. Sandfire became a blue chip, but these are very far and few between. You need to, as I said, you've got to work out who's a Usain Bolt and who's a marathon runner. Once you can decipher which stock is which, you're going to do a lot better.
Well, speaking of Sandfire, I think they had a bit of a tear today on, the copper price is getting stronger. The Sandfire price got stronger today on I think it was a discovery that they made today. Do you see the copper price continuing to strengthen and some interesting opportunities out of that?
Well, it's at a 7.5-year high, which is fantastic. And you're seeing BHP advertise it as the metal of the future. Sandfire have done the right thing by taking over MOD because their mine life at DeGrussa was getting limited. And now, they have to look for growth opportunities. But the copper space is quite hard unless you make a major discovery. But my client's copper focus is on Eagle Mountain, EM2, which is Charlie Bass. They're building a resource in Arizona, which is a good business. We're in a lot lower. But the copper space has been quite difficult. But if you look at Oz Minerals, they're up in the 16s now.
Yeah.
So. Yeah.
Os Minerals has been doing well. But a lot of the companies out there, I look at some of them. Chalice is up they presented at the gold conference in last year, and I think they were 17 cents, and now they're something like $3.80. That's a crazy run for what is, in my opinion, still an explorer.
Well, they're raising $100 million. Alex Dorsch what is he, 33 years old?
Yeah.
And you would have gone up to the booth and thought, well, who's this kid at the booth? Is it the son of the managing director? But good luck to him. It can just show you what 1 or 2 drill holes can do for a company. And Sandfire was trading at 4.7 cents. Then suddenly, they have some exploration success. But what I've noticed is, tin pot mining companies, once they make a discovery, the management seem to grow into it. And I've seen that, throughout my career from some of these managing directors and geologists. So, in this market, it's certainly hot. There's a lot of rubbish listed. There's a lot of companies that are regurgitating gold projects. What I've also learned to help my clients is to be brutally honest with them, Kerry. If something's a piece of crap, I'm now going to tell them, even to stop getting some brokerage. I had someone message me and said, I want to sell all my Stavely at 24 cents. And I'm thinking, you don't do this. And I said, well, I'm not going to allow that. Then they made the discovery. And I think, there's no friend, as I said, there's no friends when it comes to money. So, I'm just going to tell a client. But the issue I have is a real piece of crap tends to attract rumors, and these pieces of crap can go a lot further, and they can make you look stupid. Yeah.
Well, that's right, because and the thing we've got these days, which we didn't have when you first got into this industry, is we've got social media, we've got Facebook places where they just pump and pump and pump, and I'm looking at some of them going, I know that's a piece of crap. You can't stop it, Tony. But then again, that's why I say to people, that's why you need to listen to people like Tony. But if they're not listening to you, Tony, do you just say, listen, I'm not for you? Do you do a bit of a purge?
Oh, it's a bit like Tinder, but slower. We've got to be compatible. My client risk profiles are more like eHarmony, where you have to go into greater depth. But speaking of social media darlings, BavDip actually got suspended from Twitter, and that made the news. So BavDip said some not so nice things about certain people using the C word on Twitter. You don't do that. But this guy's got...
You don't use the C word at all,
You don't use it at all. But why would you? I mean, this guy is a prolific promoter of small cap stocks, and suddenly he disappears from Twitter. I mean, you're seeing in the tech bubble, we had all these so-called gurus that everyone followed. We had certain rock star managing directors people followed, and then it all turns to shit like every other bubble. So, there was
Are we in a bubble?
a speculative bubble. Oh, absolutely. Absolutely. When I look at some of these valuations on companies that got to the point where you'd think they'd found 10 to 20 million ounces of gold. There's a lot of other companies like in the e-gaming, e-sports areas that got these massive market caps, and a lot of them can't justify the valuations at all. And I actually saw when one of my stocks became short-term overvalued based on another company becoming overvalued, and people then try and justify reasons not to sell. But look, this is a really tough game. But I there was a saying on the great movie Wall Street that quick buck artists come and go in every bull market, but the steady players make it through the bear markets.
Yeah.
And that is so true. And what I just try and do is have my best stocks, talk to management, get to know the company, make sure they're undervalued, and simply wait. And all this rubbish is noise, because you can just rely on the share pages in the Financial Review, but you avoid all this social media BS and all the other forums where it's just people pushing their own barrows. So I think, social media has seen volumes come into these stocks very fast, a lot of tactics I don't like, but it's an opportunity to take out your trash if you're wrong.
Well, and you're not going to stop it. You're not going to stop the pip traders. You're not going to stop the social media. You just have to be able to know how to get rid of as you say, get rid of the trash. But then, of course, that's why I say to people, that's why you want to have someone like Tony, but you've got to listen to him. Ladies and gentlemen, if you've, as a result of Tony talking on small caps, you've become his client, and if you're doing the naughty thing and not listening to him, don't do that. Don't do that.
It's
here to make money.
It's getting to the point where, I mean, how much money is enough? I mean, I've simplified my life. I don't want to have hundreds of clients. I'm better off just to deal with people I like that kind of make my job easier. But I tell you what, it is very, very hard to make money. I think people are just taking everything for granted. But now, with $5 brokerage, who wants to pay someone when you can lose 80% of your money? But in saying that, it was the tailor-made facility on the ASX that brought the whole market down. This complex software that tailor-made options or whatever that brought it down, and unbelievable.
Well, there's lots of unbelievable things, but there we are. We're in a funny thing. Are we going to cover any stocks today, Tony? Do you want to?
I'm happy to leave it for today.
Excellent. No stocks today, ladies and gentlemen. You know why? Because you've got to do a little bit of homework. We can't just give everything to you on a plate. What do you think's in for last thing I want to just ask for you, 2021, Tony? I know you don't have a crystal ball, but we're having a bit of a chat.
Yeah.
What do you reckon? Stronger for longer, forever, because we've got all this so-called modern monetary theory where they're just going to print, liquidity goes into the market. Because I tell you, Tony, you're going to love this before you go. Here in New South Wales, in Sydney, over the weekend, a one-bedroom unit in Manly, which is on the Northern Beaches, right? Yeah. One bedroom, 1.9 million plus stamp duty. So over $2 million for a one-bedroom unit.
Yeah.
Insanity?
It's insanity, because I used to get the bus from Arndale down to Manly Beach, and we'd actually cook our breakfast on Manly Beach, walk up to Curl, and it was actually a rough area.
Yeah.
That was a rough area, and this is not circa 1988, 89. That is pure insanity, and a lesson is about to be taught to a lot of people when markets start to revert towards the norm and overshoot to the downside. So anyone paying that, yeah, you're a victim or a money launderer.
That's an interesting way to put it. Now, last question, 2021.
2021, I'm just sticking, I'm going to put out my best stocks list shortly. I'll just stick to that list. Everything else is noise. I'd like to see a bit of travel, but unfortunately, once we start to see some good news emerge with the vaccine, with borders, that's when markets are more than likely to get sold off. We're going to have some nasty down nights. We're going to have lots of panic. Then we're going to have finger pointing, and then something new will emerge for people to lose their money on.
So, ladies and gentlemen, therein ends the lesson for today from Mr. Tony Locantro. And what he said earlier was, if he tells you to sell a stock and you're a client of his, listen, don't ignore him. Look, it upsets him.
Yeah.
That's it for our fortnightly chat today, isn't it, Tony? Great to see you. I'll see you in a couple of weeks' time, but thanks for telling us about how people just are convinced they want to lose money. But last word to you, my friend.
I'll see you in a couple of weeks, and I will give some stocks to look at. Promise.
Promise. Love that. See you in 2 weeks, my friend.
Look forward to it.